Good evening, everyone. This is Henry Gamble with SimplerOptions.com, and in today's free video, I wanted to look at two very specific tickers, the first of which is Netflix. Now, Netflix is interesting because when we got into the discussion last week, essentially throughout primarily the time during the holidays, there were some interesting setups in Netflix that provided some counter-trend opportunities. Here on the 78-minute chart, you can see two instances of where squeezes had formed and fired against the primary trend on the daily. We had a lot of discussions about these in the chat room and the various ways that you could play them, and there were a couple people that made some money off of this. However, I prefer not to try and take those opportunities for reasons like what we saw today, where when you're trying to take those shorter time frame squeezes to the buy side, but the prevailing trend of the daily is bearish, you can get into situations like what happened today. So when everything closed on Friday, Netflix looked great, but then you wake up today and it's down 5%. You can avoid these situations by trading with these primary moving averages in your favor, and that's why when I look at a big chart like that, I like to think of the big overall prevailing trend. Now, I don't like the idea of shorting Netflix here, and of course a lot of the decision here will probably come from earnings, but the thing that you want to be careful about with Netflix is that if it takes out this most recent low, I think the chart is going to have some very serious problems. Symmetry is very powerful, and if you look back at this weekly trend, you can see that all the way from these lows that we made back in 2012, the stock has had a very reliable uptrend. Well, this decline that we saw essentially from about February, March of 2014 down into April is a given point value. If the correction that we see here ends up being a bigger point value, that really opens up the door into some lower prices and potentially a bigger move to the downside. I would prefer trading it in that direction because that puts the broad moving averages in your favor. Now that we've had all of this discussion about Netflix and trying to trade it with the trend, that's the one that's already had its move, and it's kind of the cause and effect, so to speak. The one that is still setting up that I think offers some very similar opportunities was YY. So today the stock was up almost 2.5%, but if you do the exact same analysis, you would come back and look at the chart here. Now in this case, the weekly symmetry has a little bit more room. It could come all the way down there to 56, 54, and it's not going to damage the trend as much as what we saw in the Netflix chart. However, you can see a weekly squeeze that has fired short several weeks prior, and even though that signal is trying to exhaust itself, I know that it's very powerful, and I'm going to try to play the daily in the same direction. Then when you come to the daily chart, you can see all of your broad moving averages are still suggesting that this should be a sell side setup. If you look at the previous rallies, this is always very helpful to look at as well, because this is showing you a rally that was a given point value, and even though it was strong for that number of days and made that advance, then it still had a very strong rollover. This point value is the same as what we're seeing right here. So another thing that's important to talk about with these is I am not going to wake up on Tuesday and just start shorting YY. I know there's a zone of resistance. I think the pattern could play out similar to what Netflix has done, but I will bring that down into a 15-minute chart, look for the trigger to follow through, and then see if we can get some results similar to what we saw from Netflix. So I hope you guys find that helpful. Hopefully those charts kind of give you something to watch for the weeks to come, and we will see you at the next free video.